I made $5,000 last week and over $100,000 last year by mastering this one simple trading strategy that I'm going to break down for you in this video. This strategy has allowed me to buy an apartment with an oceanfront view, an M8 competition, this Rolex that I'm wearing right now, and it has allowed me to live a life of freedom being a day trader at only 24 years old. I'm not telling you this to boast or to brag, but to show you that it is possible to become a profitable day trader even if you're trading simple strategies. Even though the strategy is extremely simple, it can be very powerful if you know how to apply it in the markets correctly. Let's not waste any more time and let's hop right into breaking down the strategy and showing you how you could start using it and implementing it into your trading as soon as this video ends. Before we even begin breaking down the strategy and how it works, the first step to any trading strategy is to understand the trend or understand the bias. We as traders always want to trade in the direction of the trend. So the first goal is to establish what the trend even is in the first place. In order to do this, what you're going to do is go to the larger time frames. As a day trader, I am primarily looking at the daily chart to really understand the trend. As a stock day trader, what I do to look at the trend or understand what the bias is for that stock, I look at the daily chart and specifically I look for gaps. The best way to show you what a gap is and how it works is to show you an example. And in fact, I made money off of this gap and understanding what the trend was doing yesterday. The gap was on Snapchat, and the previous day on Thursday, Snapchat closed at $12.82. The next day, because of earnings, Snapchat opened on Friday at $10.11. This difference in price between Thursday's close and Friday's open is an overnight change in price, otherwise known as a gap. And this gap down gave me a bearish bias. Because it gapped down, my intention was to look for a shorting opportunity throughout the intraday time frames, such as the 5-minute chart, 15-minute chart, or even the 1 and 2-minute charts. I'm going to make more videos in the future on how gaps work and how you can take advantage of them, so make sure you subscribe to this YouTube channel and wait for those videos to come out. If you're not a gap trader or you're trading in the crypto or Forex markets, what you can do to establish what the trend is to look at multiple time frames and get an idea of the direction of that stock, crypto, or Forex pair. For example, for an established uptrend, you should see a clear upwards trend on the 1-minute, the 2-minute, 5-minute, 15-minute charts, 60-minute charts, and even daily charts. The point that I'm trying to make is you want to have multiple time frame alignment. You want to make sure it's trending higher, not just on one time frame, but on multiple time frames. Let's say you've established the trend and it's clearly an uptrend on multiple time frames, or perhaps it was a gap up and your bias is bullish. From there, you could apply the strategy that we're going to be learning about in this video, which is called the base breakout. There are thousands of base breakouts that occur in the markets every single day, but our job as traders is to capitalize on the highest quality breakouts available. As a day trader, I probably pass on 98% of all of the breakouts I see in the markets because I'm only focusing on the highest quality ones. The base breakout is extremely simple to understand. We have the initial move higher, and then we have a base or a consolidation, and once that base or consolidation has finished forming, that's when we're looking to actually enter into the breakout and place our entry. This base or consolidation is a correction through time, and once the base has finished correcting, that's when we're trying to get into it long and potentially catch the next move higher. As this base or consolidation is forming, the top of it is going to represent a resistance area and the bottom of it is going to represent a support area. As a result, we are going to time our entry with the break of that base or consolidation because it is breaking resistance, and that is precisely where we want to place our entry and get into the breakout. So the entry is always going to go slightly above the highs of the base, and our stop loss is going to go slightly below the lows of the base because that is a support area. This entry and stop loss is incredibly simple because whenever you do see a base or a consolidation, you know that the entry is over the base, the stop loss is under the base. It makes it very easy for us as traders to know where we're entering the trade and know when we're going to exit if the trade doesn't work out in our favor. The next step is to make sure that the breakout meets meets the 20 period moving average requirement. If you're not familiar with the 20 MA, it is one of the only trading tools that I use, and in my opinion, it is one of the simplest yet the most powerful. I would not be able to trade without using the 20 period moving average. I wouldn't be able to make money without using it as well. The best way for me to show you what we're looking for with the breakout in the 20 MA is to draw it. So here we have the initial move higher, and then we have the base or the consolidation, and we are looking for the consolidation to base into a rising and trending 20 period moving average. Notice how this blue line that represents the 20 MA is underpriced and it is curling higher. It is not flat and it is not trending lower. It is specifically underpriced, trending higher, and curling higher. That is exactly what we want to see, and we want to be timing our entry when price is close to or near the rising and trending 20 period moving average. This is exactly what we're looking for. As soon as it comes close to the 20 MA, we get the breakout and our entry goes over the highs of the base, and of course our stop loss is going to go under the lows of the base. Step 4, you want to make sure that you have the breakout and the rising 20 period moving average on multiple time frames. You don't want to just see it on one time frame. You want to see it on multiple, because that's going to give you way more confirmation that that trade is actually valid. So looking at this chart, we had the initial move higher, and then we had the base or the consolidation right here. And notice how this blue line, which is the rising 20 period moving average, is underpriced and trending higher. And in general, you could see how well prices are actually respecting the 20 period moving average. For this, I would be looking to place my entry as price is approaching and starts to touch the 20 MA, and my entry would go right over the base and I would capitalize on this move higher. The same exact thing applies for this setup as well. We have the rising 20 MA underpriced, curling higher, and notice how we have the original move up, and this really wasn't much of a move up, honestly. We essentially consolidated the entire day, but nevertheless, we based, we consolidated until we touched or got close to the 20 MA, and that is precisely when we had the breakout. As you can see, this strategy is super straightforward. It's easy to understand, and that's why I'm able to profit off of it. My job when it comes to trading the breakout is to really find the highest quality breakouts that do have a very strong bias on the daily time frame. We'll look at one more example, but we had that really nice consolidation. You could see that prices are almost just resting until it comes close to the rising 20 period moving average, and that is exactly where we had the breakout and this move higher. What an amazing trade this was. Everything that I taught you for the breakout applies exactly the same way for the breakdown as well, except it's the exact opposite. So instead of a move higher, we have the large move lower, then we have the base or the consolidation, and right here our goal is to short it and place our entry underneath the base and capitalize on this drop lower. For the consolidation, the top of the base represents a resistance area and the bottom of the base represents a support area. As a result, that is exactly where we're going to be placing our entry. As prices are breaking support, that's when we want to get into the breakdown and capitalize on the move lower. We place our stop loss slightly over the highs of the base, just like we did with the breakout, except it's the opposite. Instead of stop loss going underneath the lows of the base, it's going over the highs of the base. The 20 MA requirement applies as well, and this is an amazing example of a breakdown that actually I made money on. So we have the original move lower, and then we based, we consolidated until we touched that declining 20 period moving average. So instead of the 20 MA curling underpriced and trending higher, it is overpriced, trending lower for the breakdown. So it is the opposite. So we want to see a declining 20 MA when we're looking to go short for this breakdown opportunity. As soon as it touched that declining 20 MA, my entry would go underneath the base, and I actually capitalized on this move lower. And believe it or not, this trade made me $5,118. And looking at it, it's a really simple setup to identify. And in this case, it was an amazing trade and very high probability, high quality setup. Let's look at at a trade that I actually traded this week and was able to capitalize on using the breakdown setup. The stock was called ALXO, and on Thursday, this gapped from $4.85. That was the price in which it closed on Wednesday, and it opened at $3.14 on Thursday. And this overnight change in price gave me a bearish bias for ALXO. From there, I went to the smaller time frames to potentially look for a breakdown. Right now, I'm on the 5-minute chart, and the first breakdown that you guys should see is right here, where we moved down, then we had a retracement, and then we began to consolidate. And this wasn't an amazing breakdown because it was kind of a sloppy base up and down. However, it still worked nevertheless. Our entry would have gone underneath the base and our stop loss would have went over the base, but this actually wasn't the consolidation or breakdown that I actually capitalized on this day. I was able to capitalize on this breakdown right here, where we had the move lower and then we began to consolidate. We see that the declining 20-period moving average is overpriced, and we essentially based right into that declining 20 MA. From there, I placed my entry underneath the consolidation and I placed my stop loss over the consolidation, and I was able to capitalize on this move lower. From here, I placed my entry underneath the consolidation and I placed my stop loss over the consolidation, and I was able to capitalize on this move lower. The breakout and the breakdown are one of the most powerful strategies that you can use in trading, and they're also one of the simplest. By simplifying your strategies and only looking for the highest quality breakouts and breakdowns, it significantly increases your chances of finding and making money off a high probability setup. If you want to learn my other strategies and how I consistently make money in the stock market, make sure you subscribe, comment under this channel, and like this video as well.